Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
The problem with socialism is that you eventually run out of other people's money. Margaret Thatcher: diplomacy is the art of telling people to go to hell in such a way that they ask for directions. Winston Churchill: to err is human, and to blame it on a computer is even more so. Robert Orban: the problem with troubleshooting is that trouble shoots back. A conclusion is the place where you got tired of thinking. Arthur Bloch.
Behind the scenes of global markets, a handful of hedge funds quietly move staggering sums of money. At the top sits Bridgewater Associates, managing about $78 billion, followed closely by Millennium and Elliott Management. Then come trading powerhouses like Citadel, D.E. Shaw, and the famously secretive Renaissance Technologies. These firms don't just invest, they run complex strategies across equities, bonds, commodities, and currencies, often using algorithms, macro bets, and lightning fast trading. India's defense strategy is quietly shifting from importing weapons to building them. The country is now the world's fourth largest defense spender, allocating about $85 billion in the latest budget. But the bigger story is where the money is going. Capital expenditure is rising steadily, funding aircraft, ships, drones, and advanced technology. At the same time, defense imports have started falling, thanks to procurement rules pushing orders towards domestic manufacturers. The result, defense exports have exploded, up more than 30-fold in a decade. India's IT giant TCS has just delivered a brutal reminder of how markets work. At its peak in January 2022, TCS was valued about $200 billion. Today, that market cap has slipped to around $99 billion, wiping out over $100 billion in investor wealth. The biggest story is valuation. The stock once traded at nearly 40 times earnings. Now it's closer to 19 times. A classic case of markets re-rating growth expectations. Add concerns around AI disrupting traditional outsourcing models, slower global tech spending, and the entire IT sector has cooled off. India's corporate profit leaderboard just produced an unexpected headline. Tata Motors' passenger vehicle business tops the list with about 85,100 crores in profits, narrowly ahead of SBI at roughly 84,700 crores, and Reliance Industries at about 83,200 crores. Here's the most important detail investors notice immediately. 82,318 crores of Tata Motors' profit comes from a one-off gain linked to commercial vehicle demerger. Strip that out and the ranking suddenly looks very different. For decades, Walmart was the undisputed king of revenue. Not anymore. Amazon has now taken the top spot, generating about $716.9 billion in revenue over the last 12 months, just edging out Walmart at roughly $713 billion. The rest of the leaderboard shows how global business is evolving. Energy giants like Saudi Aramco, tech titans like Apple and Alphabet, and healthcare heavyweights like the United Health. The fascinating part, Amazon started as an online bookstore. Today it sells everything from cloud computing to groceries. Here's a fascinating fiscal fact. Alcohol isn't just a beverage in India, it's a major revenue engine for state governments. Uttar Pradesh leads the pack, earning nearly 48,800 crores in alcohol taxes, followed by Karnataka at 36,500 crores and Maharashtra at 30,500 crores. For many states, liquor taxes quietly fund everything from infrastructure to welfare programs. But here's the twist. Because drinkers per person aren't where the most revenues come from. Chandigarh tops per capita consumption, followed by Karnataka and Telangana, while Uttar Pradesh ranks among the lowest per person despite collecting the most tax, simply because of its massive population.